This is income tax question paper analysis for May 2024 exam. I felt really happy looking at this paper because every student, whoever have reasonably prepared this income tax subject, really do well. I don't know about GST part. I will ask my colleague Mohammed sir to do a GST paper review. So I'm just covering income tax related part. And my score on this paper is out of 10, the level of toughness is only 5. If extreme tough paper is 10, then it is 5. It's a very moderate paper. Maybe from the point of view of time available, I don't know about MCQ part. Some students are saying that MCQ is also easy, but descriptive paper, I think every student was really happy looking at this tax paper, because in the group also everyone is saying easy, exemption. But in the easiest paper, sometimes we do mistakes. One few such mistakes that we do, I figured out here. So this is a straight, and I already told when I'm explaining even in income tax, revision class also, I clearly told, don't expect 115 BAC questions much. The first question itself is not 115 BAC. Shifting out of 115 BAC, they are asking compute total income and the tax liability straight away. And SSC is not opting 115 BAC. So ignoring 115 BAC, even entire this descriptive questions, mostly they are asking you to ignore default tax regime. And I don't know how many students, I was telling in the marathons also, I was telling in previous videos also, don't focus on default tax regime. That's the given last option. In fact, ICI in the study material, right from the first chapter, they started discussing default tax regime, which is not correct order of preparation according to me. That's why I never did my entire recordings of my CA inter income tax also in that order. So I covered 115 BAC default tax regime at last, because that is not something which is important in reality, and that was proved with May 24 exam. So I already told this. You can check my marathon also. Introduction also I specifically told they will not test. Anyhow, so by the way, whatever it is, I hope you did your best. This entire problem is in PGBP. You have PGBP question right in PGBP chapter. So in the test your knowledge questions were there. Sorry, in total income test your knowledge questions were there. In ICA material, that question is completely copy pasted with slight modifications. In this question, what I felt was this particular adjustment, there is a possibility some students might do the mistake, might make a mistake. Here, a sum of 4,000 rupees was paid as salary to one of the staff throughout the year and was not recorded in books of accounts. So this is something, this is something where the answer gave unexplained income, unexplained expenditure, 69 series provision they apply and they treat it as income, and on that 60% tax rate they apply. So this one adjustment, the ICA has solved by using this unexplained provision adjustment. So unexplained expenditure adjustment, they called it an unexplained expenditure, which is treated as income, deemed income under 69C, 69D sections. Getting it? Alternative answer is, assuming it is genuinely missed to be recorded, 4,000 multiplied by 12 is equal to 48,000 rupees. We can claim deduction. This is an alternative answer. But what I have seen in the ICA study material, test your knowledge question for total income, in my book also it is there. Whoever have followed our total income classes, especially, they know this. So they have took this unexplained expenditure, which is actually not correct. One more thing, this entire problem is something we solved in our IPCC. This same problem, same numbers. Just some few numbers are different. I did my IPCC in 2010. That time also same numbers. Okay. So I felt in this nothing is much difficult except here 80EE. So 80EE deduction is only for the house purchased in 16-17 year, loan sanctioned in 16-17 year. Only then 80EE deduction will apply. So related to that, up to 50,000 rupees you can claim under 80E. So total interest on housing loan 2.6 lakh, right? Split it 2.1 lakh, give it under 24, and 50,000 allocate it under 80E. Getting it? So 2.1 lakh anyhow you claim under house property. If at all, I have not studied this question, by the way, I'm just telling you, you claim it as deduction under house property head of income. So this is a computation of total income and tax liability. And here they have given depreciation related things. So I think these numbers are exactly copy pasted from CA book, ICA material only, straight away study material question only, total income chapter question only. So rest all other adjustments were not nothing new adjustments and all were not there at all. And the SGST penalty, this is disallowed. The 7,000 is obviously disallowed. So then what else? Other incomes, winnings, especially winnings, lotteries 10,500 after TDS, right? But in other sources you need to tax entire 15,000. I think they gave same question. I think numbers are also, I feel numbers are also exactly same. That's it. So rest all other were not much. And here no, one short-term capital loss is there, and there is another short-term capital gain is there. On shares only you can set off. That's it. That's the first question. No much complicated adjustments were there. And here it is a scope of total income, section 5 related problem, where they have given certain incomes, you just have to compute, furnish the compute total income, means after chapter 6 deductions. In this, one possibility some students may do mistake is this 12,000 rupees. This you will tax it. Now 80 TTA deduction also you have to claim. 80 TTA deduction you have to claim. By the way, they are asking you to ignore 115 BSc. So another question where 115 BSc is ignored. So almost 21 marks is over. So 80 TTA 10,000. There is a possibility some students might miss this. So that's it. So total income, if at all you missed this 80 TTA deduction, nothing to worry. This will have 1 mark weightage. Next, TDS related applicability, where ABC Limited paid a rent of 75,000 rupees plus GST. And to whom they are paying, to Mr. Ram for his PAN, also filed return of income before the date regularly. So since Ram is filing return of income before the due date regularly, higher rate of TDS and all will not apply. 206 AB will not apply. By the way, the company, it's a payer is a company. 194I only state applicable. There is a chance that students might take 194, YB provision, where more than 50,000 rupees they are paying. No, that provision will not apply. That is applicable for individual or HUF. The moment they see 75,000 per month, there is a chance that 50,000 provision they'll apply. That's wrong. It's company which is paying. So 194I itself applicable. Since yearly rent paid is more than 2,40,000, it is. On GST component, no need to deduct TDS, that we all know. Then here, 2 cars company is selling. One is 4 lakhs, another one is 12 lakhs. Since one of the car is ex showroom price is more than 12 lakhs, this we assume it as ex showroom price. Since it is more than 10 lakhs, getting it, 1% TCS has to be collected. 1%, 206C, 1FA, 1CO, something is there. Getting it. So that's it. So and she is filing, Anju is filing the return regularly. So which means no need to deduct higher rate of TCS. Then you need to write that reason also. Since Anju is filing return of income regularly, no need to deduct TCS at a higher rate. That also you need to, here also no need to deduct TDS at a higher rate. You need to specifically write that point. If you just write 75,000 multiplied by 12 months multiplied by 10%, your answer is not correct. Next, third question. It's quite easy. Mr. Ravi received an advance of 2 lakhs on 10th May from a closely held company, private company in which public are not substantially interested, in which he holds 22% shareholding. Deemed dividend provision 222 clause E, 2 subsection 22 clause E. The company had an accumulated profit of 1 lakh. So which means out of 2 lakhs loan, 1 lakh is treated as deemed dividend. So that is taxable under income from other sources. So they are expecting you to write 2 clause 22 subsection 22 clause E provision. And in the given case, since accumulated profits are 1 lakh, 2 lakhs loan received, entire 2 lakhs is not income, only 1 lakh is treated as dividend income, and it is taxable under income from other sources. Next. This is even more easiest problem. 35 deduction. Entire 35 deduction they have asked. Entire 35 deduction. Mostly revenue expenditure, you'll get flat 100%. Capital expenditure, you'll get 100%. Contribution to notified approved research association 100%. 35 subsection to clause 2. Paid to an Indian company, main objective, so clause 2A, getting it, 2,50,000 flat deduction. 2,50,000 towards purchase of land, no deduction. For land there is no deduction. Revenue expenditure 2 lakhs by before commencement of business, eligible for deduction in the year of commencement of business. That too it is for staff purpose, salary purpose and material purpose only you can claim. So it is eligible for deduction. Compute deduction, assuming he has not opted for 115 BSc. It's a straight easy question, and this is a capital gain question. Capital gain only, yeah, correct only. So Mr. Surinder furnishes the following particulars for the year 31st March. He had a residential house inherited from father in 2009. Okay, so previous owner concept. Fair market value on 1st April 2001 was 13 lakhs, which means previous owner would have purchased before 2001. In the year 1334, further construction, so cost of improvement is there. The house was originally purchased by father before 1/4/2001 for 10 lakhs. So fair market value is there as on 1/4/2001, and actual cost to previous owner, whichever is higher. So we will take cost of acquisition as what? 13 lakh. Stamp duty value on 1/4/2001 was not given. We assume that fair market value 13 lakhs is not more than stamp duty value. That assumption you must write. Assumption is very important here. 4 marks question. On 10th May, the house was sold for 75 lakhs. Stamp duty value information is also not given here. Expenditure in connection with transfer is 50,000. So 75 lakhs minus 50,000 net consideration minus 13 lakhs multiplied by cost of indexed cost of acquisition. Now when you're taking indexed cost of acquisition, no, you should take first 910 year in which first held by the SSC is when 910. So from that year you should take indexation. 910 onwards you should take indexation. So denominator indexation. Alternative answer is what? Indexation is available from the date in which previous owner is purchased, because for period of holding you are considering it, right? Period of holding point you have to write, indexation point you have to write. Manjula Jesha case where you can claim indexation from 2001 itself onwards, that you should show it as at least a note point. I think they will expect that also, but considering it is 4 marks question, I don't think they are expecting alternative answer also, since it's a 4 marks question. Plain computation of capital gain is enough. But if at all you wrote that Manjula Jesha case reference as well, I think that will be much more good. So you are in 100% safe zone. And on 20th December 2023, means during the year itself, he purchased residential house of 12 lakhs and he does not own any other house. 54. So he is eligible for 54 deduction. That's it. I'm not doing computation and answer and all. I'm just telling you. I hope you might have done really well. Fourth question, last question. Mr. Joshi, resident Indian, aged 58 years, furnishes the following details. House property income computed. Income from proprietary business income. Short-term capital gain on sale of land. Okay, short-term capital loss on equity shares listed in stock exchange 75. You can sort of these two. Okay, interest on bank FD 50,000. By the way, aged 58 only. Okay, fine. Big 50 received by his son, aged 21 years, out of the money gifted by Mr. Joshi in 2022. Not subject to clubbing. Sorry, just a minute. It was given in 2022. So previous year 23-24. I think 2022 means probably he is at the time also a major. So amount gifted to son, major son. So clubbing will not apply. Income of minor son only is subject to clubbing. I think clubbing will not apply. 2022 means right now 21 years. So 23-24. Obviously he is of 20 years age in 2022 probably. So at the time also is already a major. So clubbing will not apply. Fine. Loss from speculation business. Loss from speculation can only be set off against income from speculation, 73 section. Loss from owning and maintaining racehorses, 74A. So it can only be set off against income from owning and maintaining. So predominantly what they tested is set off and carry forward provision. So that you need to carefully apply, and he has shifted out of default tax regime. Very good. The student whoever highlighted, he just highlighted everywhere shifting out of default tax regime. I think he did really good. Next. State whether the following persons are required to file the return of income. It's the return of income provision. He's opted for default tax regime since basic exemption but not crossed, is exempted. 65 TDS credit, since TDS is more than 50,000. For senior citizen, 50,000 is the limit. He's supposed to file return. Gross receipts from business. Yes. I think this is quite easy question entirely. That's it. So I think every one of you would have really rocked the paper. This question is, I feel, straight question from the total income book. Let me see once total income book. I'm very excited actually. I'm very excited. Yeah, solved workbook. Let's go to total income. This is our total income related problems. I think yeah, exactly. Not this. Either in the total income or probably in PGBP chapter. Somewhere I've seen this question. Yeah, I found it. In PGBP only this problem is there. Exact problem. Only numbers are different. Exact problem. As it is, you can see the adjustments, all that. In this, there is an adjustment. A sum of 4,000 salary was paid to staff throughout the year and has not been recorded. So only amounts were different. They treated it as income. They treated it as unexplained expenditure, 69C. So they have given a note here. Alternate view is also given. Alternative view. It is also possible to take that salary. So whatever the view you have taken, I think it will be considered. Don't worry. So this is exact same question, which is there in the PGBP itself. It's there in PGBP in our book. That's it. So I hope you have really done well the income tax. All the very best.